Welcome everyone to another episode here at the Inner Wealth channel. Today we're going to be covering one of my most favorite topics here. And so let's go ahead and clear this chart. And today we're going to be speaking on imbalances or insufficient price action. Okay. The reason that this is one of my favorite topics is because it is widely used throughout many trading strategies. You guys may know it as an IPA, insufficient price action, fair value gap or FVG, gaps, imbalances. Okay, it is a technique widely used throughout many strategies, and the reason is because it is so powerful. Okay, it is my belief that the markets are liquidity engineered, and therefore I don't believe that it's individuals that are necessarily moving the markets so much as my belief is that there's an algorithm that moves the markets and provides us with this price action that we see. And so given that it is an algorithm, I do truly believe that it will continue to these concepts will continue to show up and will continue to be relevant even in far future. Okay, so with that, guys, let's dive right into it. So an insufficient price action, or an IPA, consists of 3 candle plays. Okay, it consists of 3 candles, and right now I'm going to show you guys a couple of bearish examples. Then I will be showing you guys a bunch of bullish examples and how I utilize them. Now, for all of my individuals asking for entry videos, the structure and imbalances plus liquidity all go very much hand in hand. Okay, not just that, but to me, and I just want you guys to know this on record, to me, imbalances or insufficient price action is a type of liquidity, and I'll explain. The reason that I see this as a type of liquidity is because there's either an over distribution of orders or an over accumulation of orders, okay, in any given imbalance. So an over distribution of orders is liquidity. So what is liquidity? The measurement of how many market participants there are at any given time. And so when you have an over distribution of orders, you get something that's called a bearish imbalance. And the best example I could give you guys here is this 3 candle play. So it's going to consist of this candle here, first candle, second candle, and third candle. Okay, so 3 candle plays. They don't all necessarily need to be bearish for this to be confirmed. Okay, they don't all have to be bearish, but what has to happen in order for me to consider a 3 candle play is the second candle has to create a large impulsive move in one direction. Okay, so we're going to zoom in here. In a bearish example, from the low created on the first candle and then the high created by the third candle, okay, in this zone between those 2 points is what we call our imbalance or insufficiency. Okay, so that's what we call our imbalance or insufficiency. It is a bearish imbalance. It's an over distribution of orders, okay, an over distribution of liquidity that was offered on one side. And so it's not necessarily that there wasn't any buying momentum in here, is that there was an over distribution of selling momentum in this area. Okay, fair value gaps are something that are imbalances. We're going to refer to them as imbalances for study purposes. Okay, This imbalance, these imbalances can be utilized for entries. They can be utilized for either support or resistance. They can be utilized as targets. And so it is very crucial for you as a trader to understand what a fair value gap is, or apologize, what an imbalance is, right after we establish that, huh? Okay, so what an imbalance is. So this is a bearish example of what an insufficiency is, okay? An imbalance is. So I'll show you guys many more examples. Okay, I like this example a lot because like I mentioned earlier, a bearish imbalance doesn't necessarily mean all three candles in play are bearish. As you can see here, here's our number one. Then we have this bearish down push here. And then we have number three. Okay, so number one, number two, number three. The space, okay, occupied between the low of the imbalance of the first candle, the low of the first candle, and the high of the third candle, everything in between right there is called a bearish imbalance. This is where sellers were over distributed, okay? A high power of overselling or high power of selling momentum was distributed throughout this price action, okay? And why do we look at insufficiencies, you may ask, okay? And I used to have this question all the time. The reason you want to look and pay attention to insufficiencies is because as institutional traders or as smart money traders, we want to follow the rhythm in which these huge entities are trading, right? So you want to find, in essence, manipulation in price, because that's when we know that these big entities are in the trades, okay? And so because these entities mainly use algorithms to distribute price or accumulate orders, the reason that we want to follow these imbalances is because this is, in essence, you can call a footprint. So when you're following in nature, when a hunter is following a prey, or you as a trader, when you are hunting down your entry point, when you're hunting down your setup, okay, in nature, what happens is the hunter will look for tracks, for footprints left behind, okay? Now, these footprints that are left behind are traces for us to follow. These are the traces that the algorithm leaves behind for us, the traders or the hunters, to search for our setup, okay? So when the institutions are in play, they will more than likely leave signs behind or footprints of their manipulation. Okay, so you can see here on this bearish example, this was a nice bearish move, manipulation to the downside, where buyers weren't able to really be buyers. There was more of a sell distribution. And in the market, what you want to see is an equal distribution in price for both buyers and sellers. And so when the market is over distributed with sells, for example, we tend to come back into those areas, okay, as you guys see here. So now I'm going to show you guys a couple of bullish examples as well. Okay, so a bullish example here would be this one. First one, then you have your middle second, and then you have your third. Okay, in a bullish example, the high of the first candle is now utilized. Okay, one sec. The high of the first candle is now utilized, and the low of the third candle is the closure of the imbalance. Okay, so you can see here, the high of the first candle and the low of the third candle, between those 2 points is what we call our bullish imbalance. Okay, just like in bearish price action and vice versa, there was an overaccumulation of buying order, right? So much buying momentum was offered in this price action that there was a overaccumulation of strength in the market. And so price delivery was offered on the buyer's side and not offered on the seller's end. And so what price action tends to do is trade above it. And once it does, we tend to come back and test or fill these areas. Now, it is a very, very important note to take. We do not have to always fill imbalances. I will repeat that. It is very important for you to know. We do not have to fill the entirety of the imbalance. We can simply just test these imbalances, and I'll show you an example of that, what that looks like. Okay, so another bullish example here would be the high, this first candle. Let's delete this last example. Okay, the third candle here. Okay, and then you guys can see that we created this bullish example right here from the high of the first candle and the low of that third candle. It's another imbalance that was left behind. Okay, one more example. The high, this first candle number one, the high of it, of that first candle. Then we have the second candle that creates the imbalance itself. Then you have the third candle. Okay, now it is important for you guys to realize, okay, that an imbalance is not created until that third candle is fully closed. Once that third candle is fully closed, then you can set and determine that that is a imbalance. Okay, we can anticipate imbalances, but we cannot predict when that, until that candle is fully closed. So as you guys can see here, price moves above, comes back down into our imbalance, fills it up, and leaves from that area. Okay, so imbalances are an indication for our smart money traders to anticipate when the market was manipulated or offered on one end, and it also shows us a confirmation as to when we're following these institutions, these higher, bigger entities that are trading within the markets. It is in confirmation for us to follow their footprints, okay? Because most of the time what you guys will see happen is these imbalances, not always, that's important, not always, but these imbalances tend to get filled or tested. And what is a test in price action? This is what I consider a test. You have this low of this candle, the high of this third candle, and this candle, this fourth candle following that third, is an area that, a candle that tested our imbalance. This candle up here filled our imbalance, and this candle down here is an example of it testing our imbalance. Okay, now you guys know that I love to make videos that are very fast and easy to digest for you. So guys, I want you to backtest and learn how to identify imbalances, learn how to follow smart money, follow their footsteps. Remember, you as a trader are hunting your setup. You're hunting for a setup. So you want to find these tracks, these footprints that these institutions leave behind for us. They don't leave it for us, but they leave footprints behind, and that you, the trader, are able to follow. Okay, just like in nature, the hunter following its prey, it will find tracks, okay, of their prey, tracks of their prey leaving behind. Just like that, you guys are hunting down your setup. These are clear indications that you're in the right path or looking in the correct areas. Matter of fact, to a little sneak peek for entries, me personally, we will be using these imbalances to find our best setups. Okay, my favorite setups all have to do with imbalances. So as we progress through this playlist, you guys will learn more and more on entries, and we'll get more in depth into that point. But for now, I want you guys to backtest this information. Don't just take it because I said it, but backtest this information. Learn to identify imbalances, and I will definitely catch you guys on the next one. All right, so with that.